From the Street's newsroom in New York, I'm Jill Malandrino for The Street with your weekly recap and the first trading week of 2015. Let's quickly recap what we saw in 2014. If you look at a 1 year, the S&P 500, you can see it was another year of a significant uptrend with few dip opportunities, all of which were met with a V-shaped bounce. The S&P closed its final day of trade with a gain of 11.39% for 2014 or 13.68% when reinvested dividends are included. It was the third consecutive year that the market benchmark has risen by more than 10%. The Dow and Nasdaq also closed 2014 higher by 7.52% and 13.4% respectively. Let's turn to the first full trading week of 2015, and we kick it off with some of the most key data points of the month, including ADP Employment Change, Jobless Claims, and the all-important Non-Farm Payrolls report. In addition, several consumer and manufacturing numbers are on top, as well as the FOMC minutes, but there's little expectation for a major reaction with the news out of the FOMC already out there. 5 S&P 500 companies are expected to report, including Micron, Monsanto, Family Dollar, Constellation Brands, and Bed Bath & Beyond. Family Dollar could be interesting around some merger commentary, and Bed Bath will be a good read on consumer trends this past quarter. The key trade will come back to commodities in 2015, just like it did in the back half of 2014. And I think that is really where the focus will be for the new year due to many factors. Crude will certainly take center stage following its over 40% drop since the June 2014 high. While it may not have been as large in dollar terms relative to 2008, the velocity of the drop with no floor and support is the difference, especially as the economy and markets are in much better shape now than they were 6 years ago. And that is what has traders concerned. The major issue is centered around the supply glut with OPEC and non-OPEC members stuck in that stalemate with production and pricing. Speaking of uncertainty, gold is another commodity that will continue to see volatility as traders speculate on the timing of interest rate hikes and the strength of the U.S. dollar. FOMC meetings and statements language will be heavily scrutinized as traders and analysts look for clues on any sort of policy change, which will clearly impact gold and global currencies outside of any major geopolitical or natural events. Regardless of what we see in 2015, one thing that is consistent is the coverage our reporters and analysts bring you from the street. For The Street, I'm Jill Malandrino. All the best in 2015.